Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A retail company and a global advertising company top this week's list of stock picks in the growth and income category. And who better than our growth and income stock strategist, Todd Bunton, to stop by to fill us in on both of these companies. Williams-Sonoma is that retailer, WSM, the ticker symbol. Now, I think you've written about them before, right?
I haven't, but
okay. Somebody must have then.
Probably Tracy. She's a value investor. It does have some value components, so
okay.
We'll talk about that in a minute. But they're definitely more of a high-end retailer, or they target the higher-end consumer. They have the Williams-Sonoma brands of stores, but they also operate Pottery Barn and West Elm, so that's very popular. That's actually those two brands are really what's driving the growth here. Williams-Sonoma has been fairly flat, but actually in the third quarter of 2011, same-store sales were up 7% across the board, and that was driven by 7% increase at Pottery Barn and a 27% increase in same-store sales at West Elm. So it's been definitely been a growth story. You hear all these stories of struggling retailers. Well, the higher-end consumer is still doing pretty good. So they're spending money, spending it at Pottery Barn, West Elm, and that's led to a string of positive earnings surprises. That was on display in the third quarter. And when you take a look at the pricing consensus chart, consensus estimates for 2011 2012 have just steadily marched higher over the last several months. And that's been because of a string of positive earnings surprises, again, led by strong same-store sales, both at Pottery Barn and West Elm. So you've got a good growth story here. Based on consensus estimates, analysts are looking at about 16% earnings per share growth this year, 12% growth next year. And it's not just growth, but you get an income component as well. The company pays a dividend that yields 1.8%.
That's what we like to hear.
Yeah, so good total return potential here. The company initiated its dividend in 2006. It's raised it every year since then, about an 11% average rate. So they have a solid balance sheet, strong free cash flow. I'd expect that dividend to continue marching higher into the future. And as I spoke to earlier, they trade at a very reasonable valuation, about 15 times forward earnings. That's a discount to its historical multiple of 19 times. PEG ratio right around 1, so a lot of total return potential here.
Okay. And in that global advertising category, there is Interpublic Group of Companies, IPG, the ticker symbol. This company's been around for a while.
Yeah, they have. They're actually one of what they call the big four advertising agencies around the globe.
Yeah.
So one of the largest. And advertising, it tends to be one of the more cyclical industries. So as you can imagine, late July, when everybody thought the U.S. might be in a recession, the stocks sold off pretty sharply. Hasn't rebounded yet because fears over in Europe that the contagion is going to spread to the U.S. and affect the economy here. That's really depressed the stock price. But there's been a split because the business has been doing really well. They actually delivered a big earnings per share beat in the third quarter, higher sales across the board. And that led to analysts raising their estimates, sending it to a Zacks number 2 ranked buy.
So is most of the income, are you seeing most of the income for this company coming from overseas?
It's been a solid mix. They have very solid North America sales too. So and management actually recently had a conference and said they're not seeing any sort of slowdown in the fourth quarter either. But they definitely are growing in the emerging markets too, and that should drive the bottom line for years to come. When you take a look at this is a chart you can find on our estimates page at Zacks.com.
Okay.
You can see consensus estimates for this year and next. Analysts are looking for over 30% earnings per share growth this year, 20% growth next year, and that'll be driven by as long as the economy's solid here in America, advertising spending should be solid. But India and China, they are growing by leaps and bounds there, so that should help grow the bottom line. And a very good income story as well. They pay a dividend, it yields 2.7%.
Wow.
Now they actually reinitiated that earlier this year. Their dividend policy went on about a 9-year hiatus, but they reinstituted it early this year. And that's really, that speaks to management's confidence in the business.
Where was the dividend when they stopped it?
That was back in 2002. I'm not sure the level.
Would have been interesting to see the level they stopped it at and then the level they reinstated it at.
Yeah, for sure. But, you're getting a yield of 2.7%.
Yeah,
so
still
that's
nothing to complain about.
Absolutely.
There,
so
right?
that's very solid, yeah. And valuation looks very attractive, too. They're trading at just 12 times forward earnings, discount to their historical average of 20 times, PEG ratio 0.9. So there's a lot to like here.
Okay. Do you own either of these two?
I don't.
All right. If you watch these videos, Zacks Rank Buy videos, that is, from outside of Zacks.com, then you need to get over to Zacks.com's homepage, because there is where we have stock pick ideas in other investing categories that we write about on the website. We put 4 new stock pick ideas up there for you daily, one in each of those investing categories. With Todd, I'm Terry Ruffalo.